Hey guys, what's going on? Sunday. I'm just out here enjoying the beautiful Florida weather. I live in a very rural part of Florida, man. I got cows right down the block. I got livestock. Not that I own personally, but man, I could hear the moo coming. Yeah, it's a beautiful day, man. Every day here in Florida. I don't like the hurricanes. They suck. But right now, it's been great. So I've been thinking, like, this Trump thing with the tariffs. I mean, what if this turns out to be good? I'm just saying. I have to be honest, like, right now, I'm kind of up in the air on the whole thing. Everything I do is data driven. I will say and point out, which I don't even think needs to be mentioned, but I will say that the headlines and the reaction has been hyperbolic bad. I mean, that's obvious. I'm just stating the obvious, which doesn't even need to be stated, but I want to say that. And that might be true. I mean, this might be something that triggers a very serious global recession. I don't know. Like I said, I go by the data. And to me, the stock market is not the economy. I always say that the stock market follows the economy, not the other way around. In putting my report together today, over the weekend, I have to say that, I mean, the flows are still very, very strong. There are a couple of cautionary elements that popped up that I'm keeping my eye on. One of them actually is customs tax deposits, which they look like they're increasing a little bit, but it's not enough for me to say like it's a real acute acceleration in that. I mean, it's kind of like moving along the same trend that it has been. I think it picked up a little bit. We need some more data. We need some more data. You got these other things going on. You got the Senate sent a budget to the House for reconciliation, which includes a $5 trillion increase in the debt ceiling. I've been saying this all along for months now. I said we got to get the debt ceiling increased because we've been having a problem with these reserve balances in the system that's very destabilizing, and we got to get Treasury back to its normal function of selling bonds, notes to drain out some of these reserves. All right? So hopefully that happens this week. I do see that reserves have plateaued in the system. They kind of like stalled out at a high level, okay? But they're not increasing anymore. So I guess that's a good thing. So I think if they raise the debt ceiling, at least on a short-term time frame. The other thing, let me mention that. We got the April 15th tax drain. We got the May 1st tax drain. That's going to help with the reserve situation. It's not going to help with, the balances of the non-government. I mean, when you pay your taxes, you got less money in your account, obviously. So, that is a drain. I mean, on the one hand, we kind of need the drain of those reserves to reduce that instability that was being injected into the system. But on the other hand, a drain in reserves means people's bank accounts are drained. So, but that's a temporary thing. The spending eventually replenishes that. The budget, when it comes out of the House, we got to see. I mean, it's going to be making the 2017 Trump tax cuts permanent. It's going to have some additional spending for defense and the border, but it's going to have some spending cuts. So we got to see how that kind of fleshes out, We don't need spending cuts at this point because, I mean, when I look at net government transfers, they're high, they're strong, but they've stalled out. They've stalled out at a high level. They're not accelerating anymore, but they've stalled out. So I don't want to see any more cuts because I don't think that would be any good. And by the way, the only place I see cuts, if we're talking about Doge, which has been like, in the news for 2 months now, 2.5, 3 months, the only place where I can point to that maybe has been affected by Doge, where I could actually see the numbers, that's in the Department of Education, which is down. That's just every week. If I look at everything on a year-over-year comparison, because that tends to remove any seasonality or anything else like that, that's just straight line dropping down. So I think that's one area of spending where we could actually point to and say, that's probably Doge. All right. Sentiment obviously is very, very negative. I mean, last week the AAII survey of individual investor sentiment was the most bearish since the great financial crash back in 2008, 2009. 2009, actually, it was the worst. It was the most bearish since March 2009, which was actually the bottom of the crash. So take that for what it's worth. The put-call ratio was elevated, but not to any crazy degree. I think we ended Friday at a 1.18 ratio. That's not that high, So, I mean, if you look at that, but I tend to think that the put-call ratio has been kind of affected by trading in those 0 day to expiration options. Because ever since those things got started, I noticed that the put-call ratio, it's, I don't know, it's strange. Still works, just takes longer to reflect any extremes in sentiment. What else? And those extremes tend not to be where they used to be. They fall a little bit short. If you look back historically of like extreme highs in that ratio or extreme lows, I mean, recently they've tended to fall a little bit short when, and they still trigger a signal. They give a signal, buy, sell, but it's not at levels that in the past historically that we were able to look at and say, oh yeah, that's really extreme one way or the other. But what if the Trump thing turns out, I mean, look, if you talk about a contrarian guy, Trump's, if this thing works out, I mean, don't forget, and you don't know until you know, but he's talking about 2 to 3 trillion of commitments in private domestic investment. I mean, that's huge, But that has to be real. The other thing, if we get the tax cuts out of this, I mean, this could actually work out, which would be amazing because it would be basically Trump against the whole world. But I would put it more like Trump against the entire economics profession, which me personally, nothing would please me more than to see that happen, even though I'm part of that profession. But I would say my association with the economics profession is an outlier in the sense like the way I understand economics, which is the correct way, is not the establishment way. It's not the accepted so-called orthodoxy. But that's too bad. I mean, the way it works is the way it works. And that's the way I understand it. But I think it would be cool if he ends up being right. Because nothing would please me more than to see the entire economics profession buried under its under its dogma, under its propaganda, under its mythology, just shoved right down its throat and buried. I would love that. I mean, it would be hilarious. This guy Trump, you know, he makes things happen, man. And, you know, it looks cataclysmic right now. But again, I have to say, I got to go by the data. And the data could start turning really bad. I just mentioned, you know, there was a couple of cautionary things. Also, interest income transfers, they look like they've plateaued out. You know, T-bill interest transfers are down almost 20 billion year over year, but we're still getting a positive interest income transfers from Treasury securities when those roll over. So there are cautionary things that I see, but still, like, those are things like they're just starting to show up on the radar screen. Can't even tell really right now if they're of any consequence. They have to be followed. It's like, you know, you think you got something wrong with your health, you go to the doctor, he does a blood test, or he takes an x-ray or something like that, he does a biopsy. He's like, you know what? There might be something there, but let's give it some time. Let's see how it develops. We can't say right now, you know. Maybe something with your heart, maybe whatever. He just says, nothing particularly to worry about right now. Let's monitor the situation, and then we'll see how it develops. If it starts to develop into something that's something of concern, we'll deal with that. You can't go by the markets. The markets are not totally. I mean, in the big picture, in the long run, they're dictated by the fundamentals. They're dictated by the economic fundamentals. But in the short term, like the 2 days last week, Thursday and Friday, when those announcements were made about the tariff, that is 1,000,000% hyper emotion. Nobody knows. And that's the economics profession and the media pushing this stuff out. You know, this is going to be the Great Depression 2.0. These are the Smoot-Hawley tariffs. You know, totally different conditions were in place back then. It was a totally different system. The world was on a gold standard, an international gold standard. Totally different system. Totally. So, I mean, I sit back and I look at what they're saying, and I try to understand their arguments. And basically it's like they're just using an old playbook. Now again, maybe it all comes to fruition. Maybe this really, really is a terrible, terrible thing. You know, the thing about tariffs, folks, is like we're no longer in the 17th, 18th century where we are trading British woolens for Portuguese wine, okay? Where each country makes something different. I mean, we all basically make the same things nowadays, you know, with some exceptions. I get it. But we all basically made the same thing. So, I mean, this idea, and I've been, you know me, I've been making these videos like, me personally, I didn't see the need to do this because I'm saying, like, let the Chinese work in sweatshops and wreck their environment and make, you know, great stuff and send it here for cheap. I get it. But there's also an argument saying, you know, well, a lot of people lost even that jobs argument, because I said this the other day. A lot of that, too, is innovation. I mean, I did a whole video on this, like what's going to happen when the robots and the AI make everything. I mean, only the people who own the robots and the AI machines are going to get the output, and everybody else is like a dystopian, you know, they're in a dystopian world of scrounging around trying to get some food for themselves or shelter or whatever, the basic needs. If it's about jobs, you really have to consider that too. But okay, he's doing it. I don't know. We all make the same stuff nowadays. Like I said, we're not trading, British wool for Portuguese wine. We all make the same stuff. So, like, we'll see. I just think, for me personally, it would be very cool. I think it would be very cool if this just gets shoved right down the throat of the entire establishment economics profession. Like all of these geniuses, like the same thing, I've been doing this for a long time in terms of talking about this stuff on my videos, how the economics profession is wrong. Funny thing is, like, Elon made a funny comment on X because what's that guy's name? I forget the guy's name who is Trump's trade representative, or he's like an advisor to Trump. I forget his name. Anyway, he's an economist, and he's like, somebody posted up like this guy, I forget his name. Just listen, I don't spend time trying to, remember these guys. Somebody said, well, this guy is a Harvard PhD economist. And Elon said, well, yeah, that's the problem right there, because that's no good. That's bad, he said. And he's right. But the problem is, like, Elon's not much better. Let's face it. When he's talking about the U.S. going bankrupt because we got a budget deficit, that's just retarded. That's silly. But I thought it was cool when he said this guy, what the hell is this guy's name? You know who I'm talking about. I think he went to jail for a couple of months because he didn't show up for a congressional subpoena. You know who I'm talking about. I forget. Yeah, but Elon said, that's worthless. A Harvard PhD in economics. And he's right. That's probably the biggest depository of stupid, backward information when it comes to economics. It comes out of Harvard. As a lot of things nowadays. Anyway. All right. That's it. It's Sunday. Enjoying the rest of my afternoon here. And we'll see what's going to happen. The dollar is up right now. I just took a look. Maybe that's a good sign. But we'll see what happens. Again, I don't see anything in the fiscal flows, which is, what I call that is the monetary condition. I don't see anything bad in that, but I will repeat, there are a couple of cautionary things, but like I said with the doctor appointment, I'm the doctor, I'm saying, let's monitor this. I don't see this as anything really threatening right now. Yes, I notice it. It caught my attention, and we'll follow it, but that's all we need to do for now. Anyway, enjoy, folks. See you tomorrow. Bye.